Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello MJ friends, I was gonna in this video today highlight my list of daily equilibriums to be watching as well as weekly equilibriums, but then I got sidetracked with another project. So I'm gonna do that over the weekend. We'll highlight these tightening setups, as tightening trades are my favorite equilibriums because when they break, they give clear signals and usually give nice follow through. So I'll put that out with a little bit more in-depth outlook on Canadian and US MJ names this weekend. But in this video, we're still going to look at a whole bunch of tickers, both Canadian and US. So we had a lot of strength and momentum for the bulls heading into today at the end of the day yesterday. Apple came out with the bearish drop in guidance after hours yesterday, right after I made the video, of course. And so we dropped 10% in Apple today. That dragged the market down 2.4% for the S&P 500. And in my opinion, it completely sucked the wind out of the sails of the bulls in this sector. Some bulls held up really well and did see some follow through, but by the end of the day, we did see profit taking in almost all of the names. But all in all, a successful week for the bulls, and it does give a shift in momentum a bit, a shift in psychology, and a shift in sentiment. We just need the market to cooperate. Again, I've said it before, we can still see strength in these sectors without the S&P 500. It's just going to be limited. We saw such significant gains in the Canadian MJ space leading up to the first day of sales because the market was at all-time highs and extremely strong. We can still see upside when SPY is not strong, but in my opinion, it'll be much less significant. So correlations break when volume comes into whatever asset is breaking that correlation. So on a day like today, we had CRON continue its strength. It was a lead bull of the major Canadian MJ names yesterday, and it continued that lead bull action today very clearly, standing out head and shoulders above everybody else. When I'm referring to those names, I'm looking at, the general 5 that we cover, and it stood out so significantly. And the reason that it was breaking its correlation from those names as well as the S&P 500 is because clearly there was significant bull volume coming into that individual name. In order to see an entire sector break correlation from the S&P 500, it requires thousands of percent more dollar volume to break all of these individual names from those correlations than it does for just a few individual names. So a few individual names can break that sector with that dollar volume or break that correlation, but not the case for an entire sector. So keep that in mind. Dollar volume is what breaks correlations. Otherwise, you're subject to algos and automated trading linking up with the S&P 500 if you don't have the dollar volume to pretty much outweigh what those algos and automated trading bots are doing. So I'm still in my CGC swing position at this point and still profitable. It's the kind of scenario where, my trade game plan is to hold it as a swing and a bit longer term from the get-go, and then I see a day like today and it's just a clear sell signal smacks me in the face, and my New Year's resolution is to become more of a swing trader and get better at it. But then you see a double top here, CGC 29.30, high of the day 29.27. I'd be selling on that rejection very easily and saving 3%. So I'm gonna have to continue to work with this, but I think day trading just might be for me. Anyways, we closed at the low of the day. It's a daily inside bar. The bears have some momentum clearly, and we're going to be looking down at support on CGC. And we can see the low first thing was 28.10, and we closed with the low of the day down at 28.10. So 28.10 is a key short-term level. After that, there's a lack of support nearby, so we could pull back more significantly. If we zoom out to the 4-hour time frame, it's still a clear uptrend, and we are still going to form a higher low on this 4-hour chart. But the bulls want to form that higher low right now, ideally, so they have the chance for continuation here on a bull break of 29.30, that double top. So 29.30 is our key resistance, 28.10 is the first support level, and then after that 28 psychological, and then 26.30 is the next level. So a lack of support after 28.10. So keeping an eye out there on the daily time frame. No real clear trend change on the daily chart. This entire bounce is really just one bounce in my opinion. We've seen higher lows each day of this bounce, And if it wasn't a higher low, it wasn't a pullback by much at all. So we need a clear pullback to a higher low and then a break of the lower highs to try and change this daily trend. At this point, when we just look on the weekly time frame, it's still a possible weekly bear flag. We need to see further follow through for a clear weekly lower high and to allow space for the bulls to consolidate to try and change the weekly longer term trend. So on some of these names like CGC, the bulls still have a lot of proving to do, and I may end up just exiting this position break even in the upper 27s and then just reestablishing, starting with a clean slate and reestablishing my game plan from that point. So I'm going to make that decision tomorrow, depending on what the S&P 500 and oil are doing. Let's look at other names. CRON. So clear lead bull on CRON. This is the daily bounce that we were looking for. If you were watching the videos back here in mid-December, we were looking for the daily higher low to be established and for a bounce into the mid $12 range to then set a lower high. The S&P 500 weakness and the overall market fear negated that base of support that was built, and it caused another leg down with a significant pullback from that level. Now we're getting the bounce that we were looking for as the S&P 500 saw some relief on its bounce, and then of course the last 2 days, very significant volume from the CRON bulls. But this is one of these names that I'm going to highlight on the weekly because a very clear equilibrium is likely on this weekly time frame. We have the high, low the pullback, lower high, higher low, and we're just going to look for this tightening weekly range to play out in Q1 2019 over the next couple of months. And the question is, have we set our weekly lower high yet? And we're going to get that answer if we lose this uptrend. So a big upper wick of profit taking, we're going to look for a higher low to form on the daily time frame. And then from there, if we see an inability to continue and a loss of that daily higher low, that's when we say, all right, our weekly lower high has clearly been set at this point, and we're now going to look for this continued tightening range on the weekly time frame. There was a sweet bearish opportunity in CRON today, and as we were seeing this bull move up in the chat room, I said, bears in CRON are patiently waiting for a loss of the 5-minute uptrend to indicate hourly consolidation. Because when we looked at the chart, we saw at that point, when we were up around $12, very extended on the hourly chart, we know consolidation is due, and the 5-minute uptrend was lost here on this break of support. So as soon as that level broke, 1196, we dropped 2% in just a few minutes. So a 2% drop, we then bounced back towards that support level, pretty much acting as resistance, and then we pulled back the rest of the day. So a bear on that trade would have had either 2% instantly, pretty much, or if they were more patient and let it play out a little bit more, they would have ended up with about a 4 to 5% win down near the lows where we closed at the end of the day. So certainly opportunity in both directions when you have that much volatility. And also, again, when you run this hard and don't establish much support on the way up, you know you're going to see hourly consolidation. And that's what's giving us this big upper wick on CRON. That being said, we still have an uptrend on the hourly intact. So if we bounce tomorrow and the bulls are able to hold 1143 support and try and see some follow through back to the upper $11 range, we'll be watching for the potential of an hourly equilibrium. All depends on whether or not the bulls are able to make a solid bounce back up to the upper $11 range. But as of right now, out of the major names, again, these are the 5 major names that we usually cover, CRON is standing out clearly as the lead bull, especially with, almost a 30% move in the last week plus of trading. ACB clearly stands out as the weaker name of these names and the bounce attempt over the last 6 days. We have not broken the high of the initial bounce attempt, whereas pretty much everybody else has. I don't believe TLY has yet either, but APHA, CRON, and CGC all did very easily. So the ranges that we're watching right now, 659 key support and 722 key resistance. And as long as we're within this range, I would not really be looking to trade it. I would look to be trading a break of this tight range that we've been in for the past 4 days in a row. If 659 breaks, we're looking at 623. And if we get a bull break of 722, we're going to be looking up at pretty much 8 psychological. So bulls still struggling at this point. And if we look on the weekly time frame for ACB, it's a tightening range. We have the low of the pullback, the high of the bounce initially, came back and essentially formed a double bottom and still tightening here. We've been within this range now for 6 weeks, and we're going to be watching very close for a break of that tight daily range from the last 4 days, and then a break of this weekly range for the last 6 weeks. APHA still holding up. Bulls really want to hold 744. If we break 744, we're going to look to fade a little bit. This weekly time frame also has a little higher low and is trying to get some follow through. A little bit choppy on the daily time frame. Not a whole lot of consistency in one direction or the other. But here's another range that we've been within the last 4 days, 744 support to 869 resistance. And today was a very tight range as an inside bar. So we'll see how the inside bar breaks tomorrow. If it breaks bearish, 744 is the key level. And if it breaks bullish, 869 is the key resistance level. We also have to be aware of earnings that are approaching. I know KSHB has earnings coming up, I believe, next week. So any individual name that you are playing or planning on trading and swing trading, just make sure you double check when earnings are, because the last thing you want to be stuck in is an earnings reaction that you were not planning on. TLRY defending support on the daily time frame. We've got a support level of 67.66. We held it by 10 pennies pretty much, and it's getting tighter and tighter with the bears in favor. I say the bears are in favor because where we closed right now is just about $2.40 above support, yet we are about $7 below resistance. So much closer to breaking support than we are to breaking resistance. It was a daily inside bar with a tight range as well, and we're going to be looking for a clear break shortly. If we get a break of 67.66, it's a clear bear signal, and the odds will increase that we're going to break 64.06 if that level breaks, and there is a lack of support anywhere nearby after 64.06 breaks. So bears are patiently watching. Can we get a break of that 64.66 level and see another leg down? OGI standing out in a big way for the huge bull volume and the significant follow through that we've gotten over the last 2 days. That being said, we saw profit taking in a big upper wick just like CRON did as well. So OGI, what stands out here is that we did form a higher low here and then saw this bull break. So if we look at the weekly chart, a higher low was established and now we're making this move. And we're going to look at HEXO, which is similar, but a little bit of a different setup, and I'll show you why. But first things first, the hourly uptrend still intact. As long as we hold 542, that hourly uptrend will remain. If we break 542, we're going to look for daily consolidation. This move is significant enough that we're going to be looking for a daily higher low to form once we do pull back. And the big question from there will be, can these bulls form daily higher lows and see continuation and confirm trend changes? We have not confirmed the daily trend change. We have broken lower highs, which is a great start to changing that trend. And we can see these exponential moving averages are probably going to cross bullish. They've been giving some decent longer term signals with their bullish and bearish crosses, the 12 and 26 period exponential moving average here. But we need a daily higher low and a higher high to confirm the daily trend has indeed changed. So lose the hourly uptrend. We look to consolidate on the daily, form a daily higher low and see continuation. That's going to give a lot of confidence to the entire sector. And, a little name like OGI on the grand scheme of things could give an early indication. If a name like this can change its daily trend, then we're going to be watching to see, it changes sentiment where other people say, all right, who's going to be the next name that changes the trend? And people get interested in the sector again. And if you watch the views of my videos, they were slowly declining over time, as is expected with the price. And I guarantee that they're going to get a spike in views with this recent sentiment. And if we do get daily trend changes confirmed, that will only continue as interest picks back up in this space. HEXO, so the difference here, very significant bull move as well. But if we look at the weekly time frame, we're coming off of the low. So in order to change this trend, we're going to have to see a higher low and a higher high. We haven't established that higher low yet is the bottom line. And again, OGI did establish that higher low by maintaining support and then turning around and breaking some resistance levels. So HEXO did not maintain a support level. We're bouncing straight off the low, but it's a significant bounce nonetheless. And it's the same exact story. If we lose the hourly uptrend, which we're not going to do anytime soon because the last higher low, the last higher low was 503. So anything on the hourly above 503 will maintain higher lows. Resistance is up at 583. This is still very healthy consolidation. When we lose the hourly higher low pattern, we look out on the daily time frame for consolidation for a higher low to form. And again, I'm watching these exponential moving averages because they have given some decent signals in the past, both for the bulls and the bears. And we'll see if a bull cross gives that nice signal again. So hourly uptrend on these bull runners the last couple days is the most important short-term signal to be watching as to whether we can keep up this strength or whether we need some daily consolidation to form those higher lows. KSHB, this is one of those names where I was hoping for a rejection and a pullback under $6 to need to establish a daily higher low and then break the tightening pattern bullish. Because again, I didn't want to see a break of $6 after already bouncing. At that point, it would have been 40% because the bulls have used up a lot of their momentum and we wouldn't have gotten a lot of follow through in my opinion. I'd rather form the lower high, pull back, form the higher low, and then get a bull break with a more significant move and more significant follow through. So at this point, hourly uptrend we're watching, we did start to shift the hourly trend, losing the higher low pattern. And again, we're just looking for healthy daily consolidation now. And if we get another red day tomorrow, we'll then say, all right, when the hourly trend changes back to the bulls, that's our indication that the daily higher low has been established. And then we're going to head up and try and break 576 resistance. MedMen did get some follow through today, 478 key resistance. Look where we pulled back, 475. So bulls are probably going to give this level another attempt tomorrow because we still have the hourly uptrend. We had plenty of space to work with. The bulls are hoping that 450 is our new hourly higher low and key resistance is 475 and 478. If we break 478, it's a clear daily bull break because it will give us this higher low and higher high, long sloping trend change on the daily. If we reject from 478 and pull back, if we lose the hourly uptrend and we need a daily higher low, we're going to look for that to form in the lower $4 range, and then a bull break would get more significant follow through, in my opinion, if essentially it's the bulls taking a breather. So like I said, we're a little bit extended at this point. If we were to break resistance, that little brief consolidation to form another higher low and to continue tightening the pattern, it's essentially just imagine a bull who's sprinting full steam ahead and they get tired and they need to take a breather. That brief consolidation can be the breather, refuel the bulls, and then look for that daily trend change and follow through. So I would like to see, again, a pullback for a higher low to form and some consolidation here, but MedMen is close enough that we might get another test of that resistance level tomorrow. IAN, looking like we may be topping out. Bulls still closed pretty strong. We've got our low, high, higher low, and we're looking for a lower high compared to 648. We will not be convinced that the daily lower high has been set until we lose the hourly uptrend. Last hourly higher low was the low of the day, 558. Anything above 558 will maintain another higher low. If we lose the hourly uptrend, we zoom out to the daily, we look for a daily higher low to be established, and that would give us a nice equilibrium, which we will then look for a break on the second or third week of January. CURA got its bull break, and I looked at the US version here and just had no interest trading it. Very illiquid, spreads are way too large for me to be interested in it, but congrats to the bulls that got in on this bull break. First level breaking 677 was a signal yesterday. We then had a resistance level of 710 that broke. We didn't get a whole lot of follow through, but the hourly uptrend still intact at this point. 680 is the most important short-term level, and you can see that we're tightening up a bit here where we had the high of the day, big push first thing. We hit a base of support of 680, a lower high at 708, another base of support at 680, and then we closed pretty strong. 708 and 720 resistances tomorrow, 680 key support. If we break 680 and lose the hourly uptrend, we zoom out to the daily and look for a healthy daily higher low to form. And the weekly time frame here, we're coming off the all-time low. We formed a higher low compared to that all-time low, and now we're getting this bounce follow through. Again, the question for all of these names, or a vast majority of these individual names, is can we keep the hourly uptrend intact? And if not, then we look for daily healthy consolidation for a higher low. CWEB, another one in an equilibrium on the daily. Higher low was established. Maybe topping out with our lower high here. Daily inside bar formed. Have we lost the hourly uptrend? Not unless we see a break of 1532, and technically we broke it by a couple pennies. Going to need more follow through than that for a convincing bear break. At this point, when you see a break of support in this manner with no follow through like this, you zoom out and look for a potential flag. So if we do not get much follow through, and if the hourly time frame remains in a lower high, lower low pattern, but every time we see a lower low, there's a lack of follow through and we just get a bounce for another lower high, that's when we form a flag on a longer term time frame. So we'll be watching for the potential of a little bull flag here. But if we pull back more convincingly, again, just another daily equilibrium to be keeping an eye on for a break in the second or third week of January. So I'm really liking how a lot of these tightening patterns are setting up, some of them on the weekly, some of them on the daily, and pretty much we're just watching to see, are our lower highs being set? Are we going to lose hourly uptrends, or can the bulls keep up this momentum? S&P 500 finished weak thanks to Apple. check out that SPY video to see where we stand with oil and the markets overall. And tomorrow's going to be a pretty interesting day because, again, the hourly trends are important right now. And tomorrow is going to tell us, are these bulls staying strong and looking for daily continuation to test these key resistance levels, or do we need a little bit of a pullback for those daily higher lows? I appreciate you watching. Hope you do some good things out there. We'll see you over the weekend when we organize a little bit more in terms of these names have clear daily equilibriums. These names have clear weekly equilibriums. Get some top watches going on because it's pretty easy to get overwhelmed in terms of which MJ names should I be watching because there's so many of them and action is picking up a little bit in this sector for the first time in a few months. See you soon.
High, higher, low, low, high, higher, low, lower, 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 high, higher, low, low, high, higher.
Bitcoin's breaking out.